Greetings, everybody. This is Jeff Scott. Welcome to this week's top-down review, and what a crazy, wild week it was. Crazy year, frankly, crazy since the bottom of the market in March. My name, again, is Jeffrey Scott. My email address is hgsi.doc@gmail.com. And special thanks to those folks that reached out to me over the last couple of weeks doing webinars and not selling anything and not having live meetings. Sometimes it gets lonely and you don't know what people think. So I do appreciate the comments. And, constructive criticism is okay too. If you're watching this on YouTube, I'd like to point out that the initial upload will probably be horrible because they put it in standard definition, which means they really compress. But about an hour and a half after I put this up, it should be 4K. I changed the resolution a bit. I increased the magnification, which should make it a little bit easier to see and less blurry for those that have not joined the modern era and gotten a 4K monitor, or like people at my age and above can't see a 4K monitor, so I understand that. You can certainly put remarks in the YouTube box under comments, and let's get going. So the question I ended the week with, for me, was the last hour trading Friday, the beginning or end of the melt up. Markets don't usually die of old age. Typically, something happens, and rising interest rates can be one of them. A breakdown in the bond market related to that could be one of them. A weak economy could be one of them. So many things that could cause that. But often, before a market is done, it kind of goes up vertical. And it felt like that on Friday afternoon. Now, the other thing that makes me really wonder about a melt up is that the real money webinar portfolio that I trade, this is my money. This is Jeffrey's fund money. When I buy things like boats and houses, it comes out of that fund. It's up $2.1 million in 29 trading days this year. Now, that's not unheard of for 12 months to be up 70%. But in 1 month and 12 days, it's a little bit absurd. I've learned a few things over the years. I learned so much from Ian. I know that you don't get returns like that without a market that is exploding to the upside. Just food for thought. This is for educational purposes only. Any recommendations are in the spirit of education, not investment advice. I am a doctor, not a broker. I hold no licenses that would allow me to trade for you or give you advice. And what I point out are just things that I've learned over the years to help you in your journey to become a better investor or trader. I am independent. I use a lot of tools. I pay for those tools. And sometimes I'll even bring the people that make those tools onto my videos so that they can show you how they use them. Heck, I learn every time they do that. Now, the reality is sometimes they're going to offer you a deal. And I just want to let you know, I never take a penny when you buy something. No one pays me anything. This is truly volunteer. Trading involves risk. You're solely responsible for any investment decisions you make. I did that option analysis last week, and I'm going to talk about some more today. But if you don't know trading options, you need to learn trading options. You don't trade options just because I give you some ideas. Option Industry Council has a lot of information, and there's a lot of very smart options educators out there. I am not one of them. I'm not going to spend much time here. Most of you have been here before. I always entitle my stuff, Be Your Own Guru. Learn for yourself, learn from smart people, and create your own model of what works for you. I am not like anybody up here, but I could show you parts of what they do throughout my trading. I own a lot of software. When I'm smart, I kill my background so you can't see all the programs I have. If my wife only knew how much money I've spent over the last 25 years on things I don't use, then again, it's about return that matters. TradeStation or Thinkorswim are going to be on my computers all the time, Hgsi and EdgeRater. And then in TradeStation and Thinkorswim, I use a lot of indicator sets. Some have been homemade for me, some I've had ordered, some come from friends who want to thank me, which is always fun and not expected. And I've got Dr. K's tools. I've got the Q tools from Sagar, and John Person's indicators are some of the key things that I use. Again, I am an unpaid volunteer. This is just education. Let's go forward. Now, I do pump up a little bit Hgsi, the software program. I do it because I'm selfish. I use the program, and everybody has everything the same as everybody else. And we very freely share. The person indicator set was the first value added add-on that costs money. Maybe there'll be more. But I do this because I like the fact that I could call up George, the proprietor, and if I beg, sometimes I can get new indicators. Now, I don't have to beg. If they make sense, he puts them in. And I like to see the program stick around, so I continue to support it because I make a lot of money because of it. It's really a critical program in my analysis. As we talked last week, stock patterns are cyclical. And, last week I mentioned that it felt like we were rolling over the week before and that maybe we're going to take another leg up, and we certainly did. Boy, was Monday ferocious to the upside. Tuesday, Wednesday, Thursday, and frankly, Friday until about 3:30, we're kind of sideways. And then boom, the melt up into the end. What happens next week? I don't know. Talk to me at 9:35 on Monday, and I'll tell you how it opens. It's hard to stop momentum, and this market's got momentum. But as I'll show you, we are getting really at a point where even a pause to refresh would be welcome. So if you think it's going higher, you've loaded up with stocks and calls. If you think it's going down, you're playing puts and shorting. If you're neutral, you're raising cash and having smaller positions. So I do a little bit of everything. I am definitely leaning to the upside. I started, as I'll show you, taking a ton of things off the table. I think I've got 1.6-ish million of cash, and I've got to raise another probably 500,000 in the next week. So I sold some things, and boy, was the market nice to me. Gosh, I was wondering how much money I was going to have to take out of other accounts, and because I'm closing on my first of the two houses on March 1st. I guess that was for cash too, which was not what I originally expected. But I have sold a bunch, still long, as I said, but I also bought some contras, at least options on them. So leveraged, options are leverage, and then 10x on the options is leverage, and 3x on some of the directions. So I have a lot of leverage to the downside. And over the years, I've learned certain spreads and positions I can take where if they don't go in my direction, which is the good thing because they are a hedge, then I'm happy and I don't lose too much. But I'll cover those quickly if I'm right and the market goes higher. But if the market decides to take a dump on Monday, I'm prepared. If you look at Friday, it was a great day for me. I'm sure you made money as well. But there was some periods of red. I mean, certain things like materials were almost all green. Energy, almost all green. Financials, almost all green. Staples look good for a change. Discretionary is more red than green. Real estate was neutral, mostly green. And you could see on the futures closing up anywhere between 0.19 to 0.67 on Friday. Much of the rally came in the last 30 minutes. Let's go look at the major markets in Thinkorswim. I mean, it always amazes me that this tool, not only is this tool free, but that the data is free. I mean, it's amazing. And it's open source, so it's easy to share things. So here is the E-minis for 1 year. Here was the low on March 23rd. All-time high and closing high on Friday. How can you be bearish with that? At some point, it's going to stop going up. And you could see here, Tuesday, a nice up day on Monday, bullish candle. Tuesday, Wednesday, Thursday were dojis 3 in a row. And then Friday, a breakout. Now, is that going to be a false breakout? Are we going to come back in? Wouldn't surprise me. But the way this market's going, it's to infinity and beyond until proven otherwise. Very bullish looking S&P futures. If I look at the NASDAQ futures, I could say the same thing. Ditto. If I look at the Dow futures, hit the high intraday on Thursday, high closing of the year was on Friday. Same thing. It looks great, but again, we had a couple days of nothing. It was just the end of the market on Friday that turned it around. The Russell, the Russell's interesting. I mean, part of what had made a difference the prior week for me was, I mentioned, I think 2 weeks ago in my video, that I had started moving more towards Russell and less in the large NASDAQ stocks. And the Russells just went crazy with this reversal here. Reversal started a flag perhaps on this week, and then did it break out of the flag, a bullish flag reversal on Friday? We shall see. The all-time high was set on Wednesday. Again, how can you be overtly bearish when you're at all-time highs? Well, we'll look at more information. The VIX kind of getting closer and closer to that 16, 17 range, where it's now dropped below 23. So the VIX is certainly low. And if you look at the volatility of the VIX, which is something that I've started paying more attention to, you can see the volatility of the VIX is sort of down in resting area, not an issue. So the VIX is not showing any volatility. Perhaps we should be concerned about the complacency. And then the dollar, as I thought it might happen when I did my video last week, the dollar seemed to have reversed and has come down some. Now, this could be just a short-term reversal. And one of the things that some people realize, that I think I've said it before, is when I break above a moving average like I did here, I'd rather not buy the breakout. I'd rather buy the retest and hold, and when it goes up again. Why? Because, well, look at here. Got above the 17. Do I buy it? Nope. Do I buy it? Nope. Do I buy it? Nope. Here it broke above, it retested, and now it was okay to go long. So the dollar come back some, but it stalled on the 50. So I think the jury's out on what the dollar is going to do. On the weekly charts, we'll just look at it here. You can get a sense of how the markets did. I screwed up on this picture, and I sort of pulled in a little bit on the YM. But just look at the Russell and its move off the low, especially in the fall. That is a amazing run, straight up. And it's much more aggressive vertical move than the other indexes. Now, why did I say it felt like there was a melt up on Friday? On the left is the SPY, on the far right are the Qs, second one is the Russell, and the third one is the Diamonds. So these are the market ETFs. And look at the last 30 minutes, especially on the S&P, the spiders, and the Qs. Now, I was expecting the opposite. Truth be told, I left my house around 2:30, and my portfolio really wasn't doing much. It was as high as plus 50, 60. It was as low as minus 50, 60, and 1,000. And that's not an unusual, somewhat flat day in my portfolio. I turned off, went to the audio store to get some stuff for my new house. And I looked at my phone about 5 minutes before it closed. I almost fell off the chair when I saw the reversal. So I did a couple trades and had a big smile at the end of the day. Underneath, 10-year Treasury yield on the left, 30 years on the right. Notice, despite the Fed talking down rates, the real rates have risen. And I actually said they've rocketed. Are we high enough that it's going to kill this market? No. But it may cause people to start to think, and what might it kill with these rising rates? Might kill the bonds. And if the bonds roll over, the markets probably will feel some pain. Rising rates should be good for banks, especially regionals and insurers. Could pressure home builders and REITs, MLPs, utilities, and dividend payers. If you look at the Russell 2000 on the left with the IWM in red, the Russell 1000 with the IWB in orange, whatever color that is, when you have indices and AD lines at all-time highs, no divergence there, and that's kind of bullish. If you look at the AD line, the NYSE, it's reaching for the sky, as are the diamonds, the Qs, the spiders, and the IWM. And the only thing that's falling is the TLT, no surprise with rising rates. Breadth, stocks, percentage stocks above the 200 picked up this week, above the 40 picked up this week. And if you look at the stocks, the 3-month new high, new low ratio, we are at a point where almost always we get a reversal. If you notice, every one of the times it's peaked its head up here, it immediately turned down on the new high, new low ratio. Doesn't mean you have to have a big market sell-off, but to me, it's a clue that we're getting close to a point where it could just be a sideways move, but I'm paying attention. Now, the McClellans, new highs, of course, on the S&P, we have new closing highs. We did not get a new high on the oscillator, so we've clearly got some bearish divergence on the oscillator. And the summation index just cannot break over this line. That to me has got to be telling me some warning. And if I look at the weekly again, clearly you have a divergence on the oscillator. Buckets, take all the stocks in the S&P 1500, hit a button edge rater, and it tells me what percent are above the midline of the Bollinger Bands, and that's 80, not an extreme, certainly bullish. And then what percent of the stocks are in the various buckets, with minus 0 is below the bands, greater than 1 is above the bands. That's bullish, but it's not an extreme. So the S&P 15 does not look as overbought as some of those other indexes. Hindenburg-Omen's kind of folklore that was taught to me by Ian Woodward. You won't see a major market correction without a Hindenburg-Omen. So if you want to put something else in the win column, there are no Hindies. Now, I will say that despite the markets have been good, some of the excesses early in the week of 19.3 on Monday percent of stocks, the NASDAQ at new highs, and 15 or so on the NYSE, they both have come down. To me, that's healthy that they've come down despite the market continuing to move forward. Shocking alert, all green on the Woody indicator. Of course, the markets are strong. Bulls were in control this week. On the left is a tool and edge rater. So the way I use this tool, I start with a spreadsheet of all the data in Hgsi that I did a week ago. And then I ask the question based upon certain parameters, how did the market do going forward? So ERG is a combination of 0 to 99 of EPS rank plus relative strength rank plus group rank. The most it could be is 297. On the left axis are percent return for the week. On the right are the various amounts of group relative strength and EPS. And up here is return in ERG, which is taking those three numbers together. So the first thing you see is this gray line shows the number of stocks. So I don't even look at the first 3 or 4. I don't even look at the last 3 or 4. But when I get into the center here where the stocks are, clearly I see a lower left to upper right pattern, which means the higher the ERG, the more the return. There was nothing below 0 for the week of any of the groups. Doesn't mean there were no stocks below 0. So that's kind of cool looking, frankly. And clearly, as EPS rank went up, relative strength rank went up, returns went up, and it wasn't surprising to see areas where the returns were 4, 6, 8%. Speaking of returns, here is a group performance tool looking for end of day Friday the 5th, end of day Friday the 12th. Again, using the data from Friday the 5th, looking forward. First thing is I look for the S&P 500, and that's here. It was up 1.27%. My performance was in green, 2% up on my holdings. Not exactly reflect dollar by dollar because of the way I use options and leverage. My return, well, it was up about $500,000 on the week. But anyways, that's a very positive number, 70 winners, 28 losers. My buys, 231, and my filtered buys, which are trying to find the special things to look at, were up 7.05%. Now, other things that I see here, the IBD type stocks were up 4 to 5%. So again, as it showed before, growth certainly led. So there's a number of different groups here, and I guess one day I should probably talk about where these groups come from and how I get them. Sector strength, got a couple that are yellow, but there's no red, mostly green. If I look at Sagar's Q tool, Q Edge tool, I can see 1 day, 2 day, 5 day, 10 day, and 1 month, and I could see that the sectors have remained strong, although a little bit weaker with 1 out of 4 being down on Friday. For the week, we were 10 and 1. If we look at industry groups, again, as the week went on, more and more started getting, we're down, but still on the 5 days of the week, over 80% of industry groups were up. And interestingly, for the week, 3 out of 4 stocks were up, but on Friday, we started getting 50-50. If you look at the sectors, 5, 10, and 1 month, you can see for the most part, we've been up with only a couple, 2 sectors, 1 down on 5 days and 1 down in 1 month. The rest have been positive. So very strong market. You know that from your returns. On Friday, and this is a tough one, it's energy. Energy is either great or it sucks. I mean, great, bad, great, bad, great, bad. Oil is going up a lot. And in fact, on Friday, during that little mini melt-up, just bring this one over here as well. See if I can do this. And I wasn't home to see the news, but on Friday, we had a really ripped on the market open of oil, closing just below $60. Maybe there was some economic revisions. I didn't hear about any wars in the Middle East. But this gives me, on a daily basis, what industry or sectors here are leading. During the market on Monday, the 1 day, 2 day will not change, but real time will start to populate. And when the market closes on Monday, real time and 1 day will be the same and everything will move up accordingly. If I looked at energy and communications, I would have found that there's 147 industry groups. The best one, believe it or not, oil exploration, second best drilling, broadcasting and advertising follow that. So what I like to do is look at all these top groups, and then I hit this peer thing, and I get a big list of stocks that are in those groups. And then Sager has a way of fine-tuning them, and PDCE I already own, and LUMN were 2 stocks that came up to the top that demonstrated that they have good earnings per share growth, EPS year over year quarter, the last quarter 366 and 45.5. You can see the energy ones all over the place. But on both of them, the light blue says they are undervalued stocks. Canaries actually lagged a little bit. I showed you all those all-time highs on the markets. And the Canaries struggled to get above the 8-day exponential and the 17-day on Friday. So they're near their all-time high, so I'm not going to be bearish. But they're lagging. Now remember, the Canaries are not FANG. The Canaries include Tesla and bookings, in addition to Facebook, Amazon, Apple, Netflix, and Google. Baidu's in there as well. Know your news and earnings. This week, a number of different things out there, some big energy earnings. Mercado Libre, one of these super expensive stocks that I could just kick myself in the ass for not buying it. Zoetis, one that I had interest in, except I saw its earnings are right here. CVS, will they and Walgreens benefit from giving the COVID shots? Rio, some of the metals, Baidu, one that I'll be watching closely, Shopify. I've got a spread on that, as I do on Walmart. From a news perspective, Let's look through here. So we've got some inflation, producer price index, industrial production, capacity, inventories, FOMC minutes. Again, what do we expect it to hear? Still concerned about the economy and needing stimulus and not raising rates forever. Jobless claims on Thursday have been movers of the market, housing starts, especially with rates going up. PMI on Friday. I'm going to give that a medium week for information and earnings, and just point out it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. For whatever reason, the thing that I use in Twitter was not available, so I just got this from Market Smith. Thought, another great week for the bulls. Most index gains came on Monday, which was then followed by 4 days of relative sideways action. As you can see, led by the Russell and the NASDAQ. The last 30 minutes were remarkable. I showed you that. Growth led, I showed you that. I've been doing some almost thematic investing and trying to jump on those groups that were moving. Renewable and solar have been up and down of late, but boy, did they make me money in the last quarter. Online gambling, whether it's DraftKings, Penn, Caesars, I guess it's not about brick and mortar casinos anymore, but the betting, sports betting. So those guys have done well. EV stocks, this week may be another big week for that. Pot stocks, oh my God, Tilray. Tilray paid for a big part of my house this week. Fortunately, I got out of almost all my stock near the top, sold a little bit afterwards, but it was a huge return. But you got to be careful. These things that jump up and go crazy, they come down just as fast. Some of the genomic plays, been talking about Thermo Scientific, Fisher, PerkinElmer, Guardant Health, they're doing well. Remote work, Zoom, we'll talk about that. DocuSign, and FinTech. Now, as I said in the beginning, I've started to massively raise cash from my account as I have 2 new houses to start paying for and a big tax bill. Based upon the markets, I'll peel off positions and raise cash and start to eliminate margin. This will help me weather any corrections, but likely will diminish my gains for now. I did put on some protection going into the 3-day weekend, but we'll pull that out on Tuesday if the market continues its ascent. And you can see the markets are looking great for the year. My trading account at 70%. I'm not trying to goose it this year and run it up and take risk. I've got to back off on that because of my house payments. So last week we talked about Zoom. On the left, you can see the chart. Why did I like it? I liked it because it was an uptrend, kind of loose for my taste. It actually pulled down to the 200, which is a little further down. But I liked it constructively, sticking its head above the 50. I said I'd buy it if it went above the high of the prior day. The industry group was strong. It had a squeeze on Friday as well as a kahuna, and the PMC was improving. So I know it says weakening here, was weakening the last day. I'm looking back compared to a few weeks ago. So the way I managed this was I decided that this was a tall bar, and rather than sorry about that, I got interrupted for a second. So I looked at the bar and I said, you know what? I'm not going to do a put and call at the same price. What I'm going to do is I'm going to set a buy price. And on Sunday night, I set a buy, trigger my order if it closes above or trades above the high of this day. And there's a way to do that in Thinkorswim. I'm sure you all know about this secret. But down here, if I put in an order to buy something, all right, right there, there's a little gear. I open this little gear, price rules, I'm able to define how much I want to pay and what's going to trigger my buy. And I could put in orders like if the price trades above a certain amount, then it triggers my order. So what I did here is I said, and I figured out what it should be, and then I put a price in about $3 lower than that. Now the reason why I do it that way is I know that's never going to get filled if it goes up, but that way it's already loaded, and then I can see what the stock with the spread is trading for, And if I want to chase it, I can chase it. Sometimes you just get lucky. So I put the spread in. I was willing to pay $6.35, a long 420 call. And you can see I only went out to the 26th of February. Why? Because the earnings are on the 1st. 420 call long, and I went short a 415 put, sort of creating a synthetic-like position. I bought a 405 put, so risking $10 to the downside. That would be $10 plus the 635 to do the trade. And then I sold a 460 call. So what that looks like, this is the pattern that I end up with, and this would be assuming I go to expiration. And what this basically shows is that if I held it to expiration, and as long as the stock closes above 460, I will make $82,000 on this spread, or it would be worth $82,000. If it falls, I can lose up to about $40,000. No one says I have to wait or I can't sell it early if it goes against me. So when I did the trade, the price was down here, and now the price is up here. So I am in the money. We'll look at that in a second. So that's the pattern I went. So I've limited my upside, but I've also limited my downside. And I'm hoping it takes out the high price. I put max gain in my pocket, and I live again to fight again. But I'll show you where I'm at. As long as it stays at this level or higher, I'm going to be very, very happy. And that's if I decide not to close it on Tuesday, which I might. So what happened on Monday? It opened up and it triggered my trade, but it didn't fill because I priced it, several dollars below the market price. It traded down and I got lucky. Now my FOMO friend around the corner, she likes to buy in the pre-market, but she did okay too, because even though she was down, the market has gone in her favor. So I paid $6.35 per contract. I bought 25 contracts. Now, what does that really mean? It means I paid $635 per 100 shares times 25 contracts, meaning I'm controlling 2,500 shares for $15,875. Friday's close was $12.60 for that spread, nearly 100% return, and a closing value of $31.5. And as you can see, I have $15,625 in profits should I decide to take it, or when I decide to take it. Now, if the market trades up, I will probably stay in the contracts. But the first thing I'm going to look to do is I'll probably close out the 415 put and the 405 put. Right now to close them, it'll cost me $4. It's not enough, but if it gets down at $2, I'll probably close it and not risk. Now to get maximum gain, I'd probably have to hold it. So that's how I took the trade. Wasn't a difficult trade. I know how much I can lose. I can lose on this trade $15,875 plus the difference between, sorry about that, the $10 between these two puts. So I could lose $25,000 plus $15,000. I could lose up to $40,000. Now I've got a $31,500 gain. So that's a 98% gain if I closed it here against my purchase price. It's about 75% gain against my max risk. That's how I trade options, and it allows me to get good positions. Now you can look at this 635 and say, man, Jeff, you're at risk of losing that entire spread. I don't have to wait until expiration if it falls in half. But if I had bought the stock and I likely would have had a stop close to this 390 range, which would have been about 20 bucks stop, 5%. And if I bought 2,500 shares and I lost $20 on those each share, I think that's $50,000 I was risking. So my max risk here, because of the way I constructed this trade, is less than if my stop got hit on the stock. Enough of that. Let's take a look at the market. And just so you know, I'm not BSing you. It's funny, one of my friends works for John Carter, T.G. Watkins, and he had a really good couple of weeks as well. So I'm pretty happy here. I didn't own any GameStop. I didn't own any AMC. I'm not taking what I consider to be major risk trades. And there you can see my P&L year to date. And as I mentioned, I've started taking cash. So 1.5, this pretty much reflects the cash that I have. All right. Fun stuff. If I look at TradeStation just very quickly, because I think we need to look at the high jump. Start with the E-minis. No surprise, it's going to be buy signal on daily, weekly, monthly, green because it's so bullish. Those red dots are the MACD divergence. This is concerning on the daily and the weekly. And again, higher highs, but lower highs on the MACD. So that's, a nail in the side of the bull. When I come down here, I'm at 84%. I'm getting close to concern, but not concerned yet. So it's not done. It doesn't have to break down from here, but we are getting in pretty rarefied air with this MACD divergences, all-time highs. If I look at the Dow futures, similar picture, and we're at 66, so less extended. The Russell, probably the stretch champ. You got the MACD divergences, you got the buy signals, and you're at 90.73. In fact, early in the week here, we did get to 100% on the high jump. And of course, that's about the day that the market started to weaken after Monday's big run. And the NASDAQ futures were at 68. The dollar, out of curiosity, should be here somewhere. Here it is. Minus 31. So we're not at the high jump on the dollar, or should I say the low jump. You all know I like to next go and look at Major Markets Plus. And very quickly, because I don't want to take 5 hours tonight, we can see that the market was led by Bitcoin up 29% for the 5 weeks, for the 5 days rather. The FANG stocks, Facebook, Netflix, Google, Amazon, were up 15.3%. You can see closing at the top of the range. A bunch of the ARC innovators, semis were up here. The IBD 50 was up here. So if you're an IBD 50, HGSI growth stock type investor, you had a really good week. And somewhere here should be the S&P 500. Let's open it up. And I'm not going to have much to say here that's unique. I just like to do, because I do it every night, the same analysis for you that I did last week and the last 500 weeks before that. I've been doing this since before the 2008 crash. S&P 500, as you can see here, went sideways and had a nice little move on Friday. Not quite at the high jump area. Look how beautiful the weekly is. There's nothing to not like here. You're only 15% above the 200-day moving average, which is not too bad. 1.5 above the 10, 4.5 above the 50. But the market's been going up forever. At some point, it's not. You want to be long, you can join with me because I'm still predominantly long right here. There will come a time where that will be the wrong thing. The Dow, you could see the sideways movement here after breaking out. Not a whole lot else to say. This is just a red candle high because it opened high, closed lower than the open, and set a new recent high. That was actually probably an all-time high. I look at the Russell. I'm going to hit the high jump right in here Actually traded higher the next day, but then sold off, closed below. Is it getting ready to go? I had to bet I'd say yes, but it's hard to believe. Look at the demand on the IWM ETF. Then the NASDAQ composite, just like the others, all-time highs, not quite at the high jump area. What's not to love when you look at this? Wow. All right, let's look at some other things. I mentioned that the IBD 50 looks amazing. Let's see it. Amazing. Now, here's the problem that I see. I want to be buying here. I want to be buying here. I want to be buying down here, down here. I don't know if I want to be buying up here. So I think we're going to start getting to a point where we get a little bit ahead of ourselves. Now, one thing to point out about this ETF, it's not very liquid. I think some people are now moving over to the ARC Innovation ETF, which looks very similar, not as extended there, and trades over 6 million shares a day. If we look at biotech, that would be NASDAQ biotech. Pull back a little bit in a flag and had a nice bounce off the 8-day exponential. A doji here, where it opens Monday, will be important. The SOX, we know the SOX is doing good. It's up near the top. You can see the SOX is breaking out to all-time highs. Hard to be bearish a market that looks like this. If I look at the dollar, I know that's going to be down here on the bottom. Is the dollar breaking down? You know, who knows? It's bouncing around the bottom. It's certainly not up at the top. It's probably good for small stocks for it to stay weak. The VIX, hard to see much with our VIXs now because we don't have the XIV anymore because of a change in the CBO indexes, and we're just bouncing around the bottom. Hard to get excited there. If we look at gold, keeps teasing us, but it's below that 200. It's below the chandelier. It's below the PSAR dot for Wells Wilder. I'd be hard pressed to touch gold unless it broke above that. And look at this weekly bongo. It's told you to be out of gold since September, and it's been right. Will it stay this way? You know, Bitcoin, is it a surrogate for gold? Is the dollar going to have to weaken because of all the money printing that's going on? And does that mean gold is going up? Yeah, I believe it, but I got to see it before I start pouncing on it. I looked at and actually bought, I think, a small miner this week, and just the miners are just doing nothing. Up day, but nothing. And then if I look at silver, it looks a little bit better, and maybe it's because it's got some industrial uses. It's actually above its moving averages, but it's not setting the world on storm. Now this was this was a funny day. This must have been the Monday 2 weeks ago. Yeah, it popped up because the Reddit folks were going to pile on silver and take it to the moon to $1 million an ounce. Trouble is, it doesn't behave like a stock, and it came right back down. So silver didn't work. All right, next I like to look at industry groups. I highlight 07, hit warehouse view. I have 174, and I like looking at them using the 2-day force up if I'm bullish, of which I have 74 groups. 2-day force down if I'm bearish, of which I only have 8. Notice what's here. Specialty apparel has been doing really well. It's only down less than 1%. Up on the 5 days. So all these were up over 5 days. So home builders, it looks bad that they're here, but really home builders had a good week, as did managed care, etc. So not much short-term to the downside. 5-day down, 17, so not much intermediate to the downside. 5-day up, probably 90. What was it? 83. All right, let's go back to the 2-day up, and let's make sure we're sorted on raw combo. Shame on me if we're not. And the way I do top down is very simple. I highlight the industry group and I go top to bottom. I'll go through the top few. I right click, then I go change the index group and left click, and that opens up the stocks ranked by short-term momentum. You may want to rank them by 5-day performance. You do what works for you. I like it this way. Double click on AMD. Now when I go down here in this little box, I see the order that it's up there. If I didn't double click, I'd have AMD followed by whatever next is in the alphabet. I want it to be in the order listed here. So AMD is on my buy watch list. Now, I wouldn't buy AMD without it making a move in my favor. Why do I have AMD here? Well, I'm not a fundamental guy, but look at that earnings per share growth here. If it meets its forecast, great growth percent compared to the multiple. Check that off as a good thing. Liquidity, $100 stock and 43 million shares a day average. The big boys are in here, so it's got institutional support. What are the earnings? Earnings are out. Next earnings are not to April 27th. Stock is under demand. So I look at this, and I would be very happy owning AMD here, but only if it takes out the chandelier stop, which is this red line. So I'm trapped right now between the 50-day and the chandelier. So I would, if I just looked at this, make sure I'm highlighting, yep. The close was at 93.77. The chandelier exit, oh, did it already flip and it didn't tell me? Hold on a second. The chandelier here was at 94.08. The chandelier here, all right, so let's look at this again. The close was at 93.77. And my chandelier is at 93.97. I'd probably put a buy stop at like 94.05. I want it to clear the chandelier, and then I think this looks great. You're already above the 50. Your John Person buy signal, 3 pocket pivots in a row, and you had a kahuna here, and you're coming out of a squeeze. I like AMD here. My stop would probably the lowest of the 4 days to the left, which will be just below that 50-day moving average. That may be too tight, but that's how typically I would play it. So AMD, check. Intel, it's running. Intel 11th gen processors are good. There's a shortage of semiconductors. Look at the fundamentals. I'm not a big Intel fan here. Micron, I love this stock. I used to love it a lot. Man, in 2000, this was one of those crazy ones. But look at this. We're breaking out to new highs. We have mobile breakout from a squeeze on Thursday. 2 pocket pivots in a row. Kahuna on Thursday. Earnings per share growth is great. I think Micron is another one that you could look at. It'd be nice to get it to pull back some. Coherent, I think, has got a takeout order. MPWR is another one right below the chandelier. That looks interesting. There were a lot in this group. Marvell might be my favorite of the bunch. It's cheaper than AMD, which would be the only reason I like it more than AMD. Great earnings per share growth. 2 kahunas in a row. Pocket pivot. John Person buy. Mobile breakout from a squeeze. Above the 17, the 8, the 50, and the 200. Nowhere close to the high jump. Nice intermediate tightness, move up, and it's right at an optimal buy point. So yeah, I'd rather get it off the 50, but this is pretty nice coming through that 17. So Marvell looks interesting. Qualcomm below, Broadcom's another one that looks good. You can only buy 1 or 2. You can't buy everything, even if you have a big account. Consumer electronics is a second one. Microvision, I don't know. I'm nervous about all these patterns. This is a stock that's been around. Let's see, MVIS. Yes, I use MarketSmith too. Doesn't make any money. It's not giving me a pattern or pivots. It's a plus 523% from the pivot. It ain't gonna help me. Short interest, just 1.1 day. I don't know. It's lasers. Pick-up display for use in high-res, resolution, miniature imaging edges. Maybe they've got something to do with 3D printing. I don't know. Well, they've certainly been moving, as has the next one, which is Hgsi. I don't know anything about these companies. I'm afraid to talk about it. And even though it just come off at 17 day, it's already moved too much. I would never have bought it here. I don't even know who the company is. And at the time, it was doing still 4 million shares. but that was the buy point. Mobile breakout from a squeeze, pocket pivot, and a kahuna. These things have run a lot. And then you got the monster Roku. I think I pontificated about it last week, so I won't say anything now. I don't get this stock. So it doesn't make a lot of money, but most of us have one. Specialty Pharma, Biopath Holdings. I just don't buy this pattern. Don't buy this. That's a manipulation pattern. CalVista must have gone up on news. Probably worth doing research. Sometimes we'll get positive results out of trial, and then they'll digest it over time. The fact that we closed lower than the open on the Bible Gap update was bothersome, but look at how it's held it and moved up further. I'd probably do some research on this guy. Guardant, love this company, love the stock. Getting too far for new buys. If you own it, you should be very happy. Couple kahunas, just too far extended. I'm still holding on to some Horizon, which I kept up here on the second and is basically running up at a 45-degree angle, so I'm happy with that. Semiconductor manufacturers. Lam Research breaking out, $600 stock, pass. Applied Materials, same exact pattern breaking out, probably too far already. Look at where it's at on the high jump. Amacor, ditto, KLA Tencor, Teradyne. I mean, this was a great buy a couple days ago. I'm not chasing. This group looks like it's already starting to run. Food products wholesalers. It's a Chinese agricultural vegetable story called Future FinTech. I think they're playing games with the name. Investment management. I own this guy. Thank you, TG. I'd always played around with it. In December, I was walking through Best Buy talking to TG, and he was telling me how much he liked Riot Blockchain. So it was before Christmas. I think it was in the $10, $12 range, and I bought a lot. And it's at 48. Closed at what? 49.28. I still have a bunch. I've been peeling it off because A, I'm not buying it here, and B, it's a little bit extended, and C, I need the cash. Internet-based services. I don't own Zillow. I wish I did. I wish I owned it forever. Funny thing is, if anybody should own Zillow, it's me. I'm checking Zillow every day, looking to buy new houses. I like new houses. My wife is like an artist. I give her a new empty house, and she keeps her busy, makes her happy, and she always creates something that's amazing. Makes it easy to flip and then go buy the next house. Zillow, can't buy it here. It's hit too big of a run. 5R, too far. Pinterest. All these stocks have had too much of a run for me to chase. AYRO is a electric vehicle. I don't know anything about this company. And light-duty emission-free electric vehicles for urban. Don't know anything about them. I got enough EVs. Lyft had great earnings, but here's the time to buy it. 3 kahunas in a row, a mobile breakout from the squeeze. Coming off the 50, takes out the chandelier. This is the day you have to get in it. Would I buy it up here? Probably not. I do also own Shopify, which has earnings, I believe, on Wednesday. Big run up this week. I'll have to decide whether or not I keep it. I did a in-out call vertical, meaning I bought the in-the-money call. I think it was at 1380. And then I sold 1460s, I think, or 1470s. So I'm way in the money right now. Or actually not, we'll see. I have to decide what I want to do. So I could go through all three, but I'm getting tired, and you're probably getting tired of hearing me. I do want to look at life science equipment because there remains a number of really exciting stocks in this group. Illumina is probably the big daddy. Had a big move up here on Friday. I don't know why it had such a topping tail, so I'd have to do research in it. I think it's too extended. It's at the high jump, so I'd probably pass. TMO, tight, at the 50, mobile breakout, pocket pivot kahuna, John Person buy. To be safe, I might let it clear its chandelier, but I might take some on Monday even before that happens. Look at the earnings per share growth, great revenue growth, COVID who, it helped these companies. Genmark, I had looked at last week, it got had a takeout bid. Too late, coulda, woulda, shoulda. Hgsi is another one I'm in. You know, they make a test so you can, if you don't want to have a colonoscopy or you have contraindications medically to having a colonoscopy, they do a test on your stool. It looks for genetic material that would say you have colon cancer, and it's almost as effective. And they also bought a company called Genomic Health. So they're a very interesting company in the cancer world and in the preventive world or screening world. I'm in them, and I got an alcohol spread just like with Shopify, deep in the money. They got earnings this week. I'll probably close it because I want my money. Danaher, kind of like TMO, has been going kind of sideways if you look at it here, but look at the weekly. It's ready to break out again. Mobile breakout from the squeeze. Good earnings per share growth. Now, why are these companies doing so well? They're doing so well. IDEX is an animal health one. They're doing so well because COVID. Because a lot of their laboratory equipment that may have been used before for diagnosis of cancer and other chronic illnesses are now being used for finding COVID. PCR testing, etc. You need equipment. PerkinElmer, beautiful uptrend, at a good buy point. Buy stop right above the chandelier stop. Mobile breakout from a squeeze. I like this one a lot on both the daily and the weekly. So that's my top-down review. The way I got here, okay, I start every weekend, and I'll tell you all my secrets. Not really. I'll tell you a couple of them. I use briefing.com for news. I find it to be very useful. There's nothing here that's going to embarrass me, I hope. IBD. IBD publishes a lot of stock lists. If IBD puts them in this list, then there's probably a reason. So I'm going to make sure that I capture what's in that list. IBD Live, which is just outstanding. I've now become my friends in the morning when I can get away with it with my day job. Let me click on it here. IBD Live, I think David Ryan's going to be on Wednesday this week. Hope it's Wednesday. Oh, you're not, okay, perfect. Latest show, they make it difficult for you to download the videos. I found a way to do it, but they probably wouldn't like it, so I don't tell anybody. One of these add-ins for Google actually works for downloading from the JW, whatever they use. See this thing that says here, entity QA and 2 key stock lists? Every day they give you an IBD Live ready list, some of the stocks that they're watching that day. Great stocks in here. And they also give you an IBD Live watch list. So, I'm going to show you what I do with them in a minute. I already showed you that I use MarketSmith. In MarketSmith, I've got my favorite little scans, O'Neill scan, up and down volume, and then I have a bunch of favorite screens. So I run all these. Boom. In TradeStation, they have this thing called Scanner. So I run a bunch of my favorite scans. And then what do I end up doing? This is where I'm probably crazy, but I swear this is why I make the money I make. I take those watch lists, bear with me, and I load them into a directory. You can download them as an Excel spreadsheet. Then I use a macro, which rips the list of symbols out of that, and I put that into my buy list. These are all the different symbol lists. Then there are some that I want to bring into HGSI by themselves. I start my user group. Let me make this bigger. It should be 214, but doesn't matter. I bring in some of the, this is one of my favorite groups. You all have these if you have HGSI, folks. HGSI Top 50, hit on that little plus. These are the most recent, these are the top 50 stocks in the market based upon the pre-formatted different scans in HGSI. Oh, I got to take a victory lap. I hope some of you still got Generac, because who loves you? Who does this for free? And who told you to buy Generac at $100? And that was in May. And I know some of you did, because I've gotten the thank yous. All right, stop bragging. Let's go back. So, back to HGSI. Here we go. So top 50. You're going to find some of the biggest winners in the market in here. If all you did every day was look at this list, I would say you're doing just fine. All right. Then we have the smart groups. Different smart people. You can negate me as being smart, but David Ghilardi, I like his sprinters, so I pull those down here. Gil Morales, I like his Bible gap ups and his pocket pivots. I pull them down here. Ian Woodward and Ron Brown have some scans I like. I have some scans I like. Every time I run an update, end of day or during the day, those scans are updated. Down here, we have this thing called user smart groups. So if I have any scans that I like, I can dump them in over here, and then every time I do an update, they get automatically done. So here's some of my favorite scans that I use. So what I've now done is I created a list of things that I want to keep, because this is archived. I store this. I can go back and search it. And then I pull in various stock lists. I load up the IBD 50, the 85, the IBD Live watch list, and so on and so forth. Then I have a number of HGSI scans, like Perfect Speculator Buys. I love this RS Line Blue Dot from MarketSmith. If anybody's reproduced that for HGSI, please let me know. So now I create a bunch of lists. And then painstakingly, I go through and I put every stock, it's all done clicking from all those groups together, and I had 1,605 stocks that made my bullish list. Even I am not going to look at 1,605. So I've actually turned this to $5,500 shares and knocked it down to 1,000, and I looked at every one of those charts. Now, I ended up, when I did that, told you I'm crazy, 65 stocks, or actually at the time I think there was 50, that looked interesting. Then, in TradeStation, I loaded them in my screener. I call it JP buys because there are a lot of stocks from his scans. The weekly high close doji, which is my favorite scan, and my buys. And there were how many here? 183. And I came up from there with a list of 18 stocks. I took an equal list of shorts, which was not nearly as big considering the strength of the market, 480, and I ended up with potential shorts of 10. I then took those stocks and put them back into my buy watch, and there I have my 65 stocks. So now you're thinking, how can anybody watch 65 stocks? You're right, nobody can. Why do I need to? I have tools, so do you. Go into TradeStation, and in my Sonar, I have what's called my combo stocks. And my combo stocks is really one of my secret weapons. Because what I've done is I'm going to put my current holdings in my buy watch. And then I'm going to put into that list the IBD 50, the weekend review, the live ready list updated every day when it comes out. Here was Fridays, and then the live watch list, and MarketSmith, and Mike Scott's Focus 3 list, and the top 50. And then what happens is I can now monitor hundreds of stocks during the day looking for signals. All right, I can do that in TradeStation. And in Thinkorswim, it's called Market Watch, not nearly as large capacity. So I would probably load my buy watch, not probably, already have. And this will be running during the day, and I'll be monitoring some of my proprietary or non-proprietary buy-sell signals and looking for times that I might want to go looking at something to go in. Peloton is firing. I'm going to look at Peloton and maybe work that up as a potential buy. Probably too late to do it on this call. But if I look at Peloton, let's open up the weekly. Now I know they got an issue of supply. Apparently so do the car dealers, or car manufacturers now, because of chips. All right, don't play with me. Come on, come on, come on, come on, come on. All right. Clearly a big uptrend, pull back sideways, pull back to the 50, level breakout from a squeeze. Kahuna, person buy signal sitting on the 50. That's almost a perfect setup for my style. What's not perfect with this is that chandelier is too far away. But the close was at 154.67. The chandelier is at 162. I'm not going to wait $8. The 50 is at what? 144. So I'm going to have a stop. So my buy stop is going to have to be about 155-ish. My sell stop is going to be at 143, so I'm going to risk $12 on a $150 stock. So that's about 8%, just barely makes it. So this is one that looks interesting. Again, I wish the chandelier was closer, and I may wait and see what plays out. But I love the pullback to the 50 in an uptrend. I love the fact that it had that mobile breakout from a squeeze, person buying a kahuna. And I love the fact that its earnings are out. All right, getting late. I'm tired. You're probably wondering, when is this guy going to shut up? So let's get ready to shut up. Let me open up my designer. And let's just look at the stocks that I came up with that I put on my buy watch list that I'm interested in following this week. And there are quite a few. Let's change this to combo, and let's look at industry groups. So a lot of semiconductor devices. We talked about AMD, we talked about Marvell. Let's just look at Infi real quick. Pull back to the 50 here, mobile breakout in a kahuna and a person buy. That one looked interesting to me, and the other one that looked interesting in the group was Maxilinear. Already moving. I think that Marvell first, and then maybe the second one that I liked was that Infi. Let's see what else here. Peloton, I've already showed you. Mosaic, I've been in this stock already since it moved up over here. Sideways move on the 17th, mobile breakout from a squeeze, in a person buy, pocket pivot, and a kahuna. Industry group is this dark gray, looks super duper strong. Great earnings per share growth, growing revenue. Turnaround stock as it was not making money. I like this one a lot. I liked it better at 22, but who says you can't fall in love twice? My wife says that to me all the time. Digital Turbine, this has been one of my best plays ever. I got in it back, well, well before this, but let's just say I got back in here. Here's where I got it, in June-ish. Why did I find Digital Turbine? Bible gap up. But more importantly, check this out. Model book stocks. Digital Turbine. Doesn't tell me when they put it in there, but if it's in the model book, I can assure you that it's a good stock. Relative strength 99. Love this stock. KG, maybe you should get back in it. Casinos and gambling. Penn National's another one. Pull back to the 17. Looks like it's ready to run. I've been in this one for a long time, months. FedEx looks interesting here. If it breaks above the 50 here, mobile breakout, person buy, pocket pivot, and a kahuna. Earnings are 316, so you got time for it to move in your favor. Star Peak Energy, I thought it was a renewable. I still think there's some reason under a lot of demand here, sort of a flag to watch. I'm already in that position. I mentioned PerkinElmer. To show you why I like this one, let's contrast it to Peloton. The way I trade, I'm going to put a buy stop above the close of the day on Friday. Friday it closed at 150.57. The high is 151.88, and the chandelier stop is at 151.05. I'm going to forget the high of the day. I'm going to put a buy stop right above that chandelier at 151.10. So since I'll forget about it in no time, I'm going to write that down. So I put a buy stop on this at 155.10. What's the lowest in the last 4 days? 1, 2, 3, 4 would be this guy here, and the low was 142.96. The 50 though is at what? 145.49. So I like this one because I have a defined buy stop. If it goes below the 50-day moving average, I don't want it. So I'm going to set my stop at probably 145, maybe 25 cents below the 50 here. Again, the 50 is at what? It's at 146.43. So I'll set it maybe at 146.05. So 146.05 to 155 is $9 on a $155 buy point. That's only 6%, and I'm very comfortable with that. So the fact that it's less extended than Peloton allows me to have less percent risk. And I'll do the same thing as I did with Zoom. I'll probably buy a call and sell a put at the same price. Buy a put probably underneath the 50-day moving average. And then if that's too expensive, I'll look at something up in the sky. But I think PerkinElmer looks good. Tandem I talked about a couple of weeks ago. It's made its move, starting to go up. Its sister Dexcom is doing the same thing. Both look interesting here. XL Fleet Corp was a high rising insurance play. It came down, went sideways. The 50-day caught up in a squeeze with a kahuna. Probably worth watching. Look at the demand that this company is under. Don't know anything about it. A lot of talk that Fisker is very undervalued. It Bible gap up on Friday. QuantumScape is a battery play. Again, I hate buying it up here, but I don't mind buying it when it starts its second move. It's got earnings this week, so that's the only thing that would bother me. Look at the demand. Maybe that's enough to scare me. So here's a list of what I thought were some interesting stocks, and I hope you have a great week, and we'll see you next week.